You know, as context, the market has been bleeding lower. If you look at internals for the last 10 days, yesterday looks capitulatory because not only did we have a 90% down day, but the VIX, the spot VIX, exploded by 75%. There's only 4 times in history where it's risen 60% in a day. So yesterday was the 5th time in its 35-year history.
Tom Lee just called this a major buying opportunity for the coming year. And if I could only pick 3 stocks in one sector going into 2025, these would be my absolute conviction plays, as they call them, because the market's been showing signs of, well, giving up. We had this massive volatility spike last week, biggest in 35 years, and that's when the opportunities emerge. If you're short on time, here's the essence. 3 fintech stocks that I think are perfectly positioned to capitalize on everything that's going on here. And they're not random picks. They're companies I've literally tracked for 10 years, some of them longer, some of them haven't been around for that long. And then, of course, I also have the backup of Winston, my golden retriever here, who's been insanely excited about these. He loves a good fintech stock and story. And I've analyzed fintech for many years, over a decade. And if you look at the stock chart here, this is the fintech global ETF called FinX. And what can you see? Well, you can see that we were sort of COVID highs in these glorious kind of $50 range up there. And then we really dumped hard. Why did we do that? Higher interest rates will do that to fintech stocks. So we went down to about 20 bucks. We did absolutely nothing. And then the breakout started here and we got in on it. And it's kind of just starting to accelerate. A little bit of a pullback here, but just thanks to Jerome, the magnificent Powell, because he's saying we're not going to cut rates as quickly as you'd like us to. He's going to change his mind on that, and I'll explain more on that. But we're now back at 31. I believe we have this sort of 70% rally here in front of us. And there are 3 stocks, particularly, that I think are the ones that are going to make us all the money. And I'm not going to hold you hostage to those. I'm going to walk you through what they are straight away. We're looking at SoFi, we're looking at PayPal, and we're looking at Visa, indeed, which is probably the least sexy stock, but I'll explain to you why it's probably the most attractive thing you've ever come across in your lifetime. Now, you're looking at a chart like this, and you're thinking, I don't know, just a bunch of squibbles. How could you possibly know that it's going to go up? Well, first of all, let me show you our SoFi trade, which is up, and I'm tracking this also in TradeVision. We have now integrated every major broker there is, so you can finally see when you're making money and when you're not. And this is a small trade. It's a $3,300 trade because it's a teaching portfolio. It's only 30K in size. And now we're at up 264% because we bought here. And I think there is a chance we could go up another 7x or so. I think we could take this to about 1,000% gain. And how do you spot them? Well, there is one solution. You leave this video right now and you go and watch something else. That's fairly rare. People tell you that, right? Don't watch my content. No, and you don't need to because, well, this will be useful. This will teach you about these 3 stocks and why I think they're winners. And, you can come to a conclusion. But if you actually want to change 2025 for you, this isn't going to really help you that much because it's only going to give you 3 winners. And then what? You got to go do something else. You got to find another winner. Whereas if you actually learn the skills, so if I teach you to fish rather than give you 3 fish, which I'm about to, would that be more useful? Yes. So for most people, the best thing would be to leave this video and to go to felixfriends.org/get-free instead. And you'll watch a 30-minute video there, which is a masterclass where I teach you how to spot the winners, how to spot the breakouts before they happen, and how to exit before you become a bag holder. And it's very, very simple. Beginners can do it. Anybody can do it. So why doesn't everybody do it? Because very few people understand it. And the people who do understand it generally don't want you to know. Why? Well, they tend to make a living being an investor, a fund manager, the rare ones who make money, and typically, they just think, well, that's how I make a living. Why would I want to give this away for free? Right? So why do I do it? Because I've been there not having the knowledge. Now I have the knowledge and I always thought it was insanely unfair that you don't. And it allows me to have this very, very free and wonderful life where I do whatever I want. And one of my hobbies is investing because it's brilliant and it makes us money and it's just insanely satisfying. So go check that out. But let's go back to the topic here because I know the video is meant to be about SoFi, PayPal, and Visa. So why did I pick these 3? Well, each of these actually hits a different sector of Fintech. Think of them maybe as different players in the same orchestra. Each one has its own unique instrument, and together they create absolutely beautiful sounds. First, we've got the least sexy, but I'm going to walk you through it first, Visa. They're sort of the conductor of the global payments orchestra. They've built what I call a financial fortress with massive guns on the top. They're a payment processing network so vast and reliable that it's basically impossible to replicate. And then there is SoFi, the rising star that's rewriting the rules of banking. And they're sort of the innovative little jazz musician who keeps introducing new little instruments and does his own little thing. And just last month, they partnered with Templum to bring private market investments in SpaceX to retail investors, which is the sort of thing that only the ultra wealthy could usually do, right? I've got a bunch of friends who invested in SpaceX, and typically it's reserved for those people. And then finally, we've got PayPal, who are, well, they're sort of the experienced virtuoso. They're learning new songs. They're transforming from being just a payment processor to being a commerce, media, advertising powerhouse. They're connecting the dots between advertising, instant purchasing, and realizing there's a lot of money in that data that they can now actually extract thanks to AI. So Visa gives you that global, reliable growth. SoFi offers upside potential that's explosive. And then PayPal gives you that middle ground, established enough to be stable, but innovative enough to drive maybe 100% growth in the coming year. That's my humble opinion. Now, all three of these are going to benefit from one thing. And I think this is why this is very, very timely, because Jerome, the magnanimous Powell, the Fed chair, you know what I'm trying to say, the Fed chair even, he is saying, I'm not going to cut rates very quickly because, I'm a bit of a grumpy old man. But they are going to come down by more than the 2%, 2 cuts that they're promising. It's us because they're sandbagging. And the day after, he told us, I'm not cutting rates because I'm worried about inflation. He didn't quite phrase it like that, but that's basically what he's implying. The next day, what happened? We got inflation data in that was lower than expected. And that gives them the opportunity to therefore cut a little bit more. And every time the rates come down, these companies increase their valuations. It's very simple. Now let's have a look at the scorecard, the scores, the grades of Visa. And, well, profit health is an A. Growth health and cash flow are solid Bs, which is pretty impressive given how old and big this company is. Price momentum is a B, which basically means the stock market's confident about this. And then relative value is a D, but before you get worried about that, all amazing companies have relative value scores of D, E, or F because the market isn't stupid. They realize when they look at a good company. Let's have a glance at the stock chart. And we'll do that for each of these stocks coming up here. This is Visa first, and I'm using TradeVision, which is the platform that we built to give you, high quality data and access to what Wall Street has access to. And we had a nice little gap up here in November. I think you can see that, which was good. But the real kind of story here is really that we had this downward phase, we came out of it. This high was higher than that high. So now we're on an upward trend, and that's now accelerating, and now it's accelerating again. So we really are in a pretty good position here. And on Friday, massive volume, a little bit options expirations and so on, but still massive volume. And what do you see? Well, you see that there is room up to the resistance line, which isn't a line that we make up. These are actual positions. And you can now also click down here on the support and see the history of that. And that shows you that the red line here, which is the resistance line, that it's moving up. And you want to watch that. You want that to continue to go up so that you have confidence in the rally, because the more it goes up, the more the market is actually putting their money where their mouth is, and they're putting their positions higher and higher and higher. So this is, we've only got a little bit of data on this so far because it isn't publicly available, so we have to calculate it ourselves. But going forward, we're going to give you this so you'll be able to see the resistance and support history for any stock, which will be any of the major stocks at least, which will be insanely useful. So do I like where this is sitting? Yeah, I do. It's basically here sort of consolidating a little bit sideways. I think the next breakout's going to be significantly up. And when it does, boom, we're going to make a lot of money. Now, SoFi, they are on the path to becoming this AWS of fintech. And they're doing that through two platforms they have, Galileo and Technisys. So they're basically powering other fintech companies, and I absolutely love that. And they're going to benefit from the lower rates, cheaper deposit costs, higher loan demand. President Biden just came out and said, we're not going to cancel student debt for 38 million borrowers. What are those 38 million borrowers are now going to do? Well, they're going to go and refinance because interest rates are falling, right? Who's going to do the refinancing for them? Well, a little stock called SOFI. So I type it into Trade Vision here. And there's, by the way, a free week's trial to Trade Vision. You might want to check that out and play with the data and see if you get some value out of that. I believe you will. Now, we had a little bit of a sell-off here last week. And that's just because we had the Jerome Powell scare. You know, he basically came out. We saw him. We thought, scary looking man. And therefore, we're pushing a little bit lower here. Resistance has shifted back down to $15. It was at 17. So this is one of those moments where, well, what's going to happen here? It could be that we hit this 50-day moving average line, which is what this yellow line is, and that we then bounce off that. And that could be the buy moment. If we bounce off with a lot of volume, then that could be the sort of the next breakout as we're about to get it. I think people don't understand this company. I think they don't understand that they're actually now eligible for S&P inclusion. They don't understand that this is no longer a student loan business, and they don't understand how they cross-sell better than anybody else. And they're building something that's going to, and already is, seriously disrupting finance, and it's going to power the companies that they're disrupting, which is kind of the unusual thing here. So am I loving this? Yes, I'm loving it. And I think as we bounce higher, could be a really nice entry point again to load up on a bit more SoFi. And as I said, we're up already on 264% here on SoFi and holding strong. But are we going to get out if it drops a lot? Yes, always, right? So if we do this, then we're exiting. And if it rebounds, well, we're going to buy some more. So we follow the trend, we follow the momentum. We don't try to be smarter than everybody else, because this stock chart is the brain and the smartness and the knowledge of the entire market. But sometimes, if you understand a company a little bit more fundamentally, like I think I do on SoFi, we can just have a bit more strength in how we play these momentum moves, because, well, we kind of think, okay, momentum's looking good, but I know what's coming. I know what's coming. That's the way I look at it. Now let's talk about PayPal, least but not last. And they are sort of, well, a stock that you shouldn't have held from the top all the way down. And that's, again, why I keep saying, please watch the masterclass, because it means you no longer have to be this bag holder, because it's a horrible place to be and it's entirely avoidable. So yes, we're having a nice rally up here since August. You know, when did we get in on this latest trade? We've done a few trades this year. I think it says, yeah, September. So we got in here. You see, just as we broke out there, and that's been a good call, right? 31% up. You know, hasn't done as much as yet as we'd like, but it's well on the path to. But look at the chart here, right? People were buying here, and people then bought the freaking dip all the way down, you know, the dip buyers, until they got exhausted. And then guess what? What happened? Well, the dip buyers sold here, right? So they destroyed 70% of their money, plus missed out on the S&P rally that's been going on at the same time. So they doubly got hit, and we sat it out, and now we're printing money with this. And that's what I really want you to get to a point where you're confident about what's going on out there, and you're not buying fucking falling knives because people are telling you to. You are like, no, I'm smarter than that. So what's the fundamental story? Well, Wall Street is looking at PayPal as a payment processor. It's a 20 times PE multiple on this, which is not particularly high. And they're missing that PayPal is building something here that could revolutionize e-commerce in advertising. And they're copying basically Amazon. Amazon, most people don't realize it. Their second most profitable business is what? It's not retail, no. Cloud is probably their most profitable. The second most profitable business is advertising. Yeah, because if you want to sell something on Amazon, you basically got to advertise. So they're bringing in, don't quote me on the number, 60 billion or 80 billion or something like that. It's bigger than YouTube's advertising business. It's huge. And that didn't exist till a few years ago. And PayPal, if you think about it, can do the same thing, but way, way, way better. Because Amazon only has data of people and what they're doing on the Amazon platform. Right? You go off and you buy it somewhere else in some independent shop. Amazon doesn't know that. PayPal does. Why? Because PayPal powers 40% of all e-commerce transactions. So they know what you're doing. They know if you put this item in your cart on another website. They know what you've been buying across all the websites. They know you better than anybody. Well, Visa probably knows you about as well. So the beautiful thing there is that they are allowing their merchants to advertise to you. And it could be, well, you bought this phone and now you're going to need, I don't know, a cover, a supercharger, a holder, God knows what, earbuds, whatever, right? So if they make the data available to the company that makes the most fantastic earbuds in the world, wouldn't it be nice if they knew this guy went out yesterday and he bought an iPhone, right? But he didn't order the AirPods. So this guy is going to go and he's going to buy some new headphones. We've got better headphones. So why don't we show him an ad that says our headphones are better than AirPods? You're thinking about buying them, check it out, right? Just a random example. Or you could take it to a more simplistic level. Say this guy bought an orange jacket, right? It's this size. We know what he likes. He knows likes bright colors. He's a size whatever. Well, we've got a similar model, but it's blue, right? Look how good this would look on you, right? You could even with AI generate an ad with both of them in it and say, if you like this one, you're going to love that one, right? I mean, you can take this to another level. Or your favorite shops. Okay, I'll stop with the analogies. Otherwise, we'll still be here tomorrow. But this is going to be insane. They're going to close the loop on tracking advertising all the way through purchase. And this, if they pull this off, is going to be a way bigger business, a way more profitable business than PayPal is right now. And they are at the same time also doing great stuff with their payment business, the fast checkouts, Venmo, Honey, all of this is all capturing growth. So they are in a position where the core business is improving because they're not doing all the stupid stuff that the previous CEO did, which was just acquiring random businesses. Lazy CEOs do that. They sit back and they go, bring me in some consultants and a bunch of investment bankers who slipped me brown envelopes. I mean, of course, he didn't do that. No, he was above that, obviously. Do you think I covered myself there? I think so. I'm not implying that in any way, shape or form the man is whiter than white, almost as white as me. And then the investment bankers come in and go, oh, I think you should buy this company. It's only $5 billion. You got it in the top drawer. Why don't you go and buy it and pay us 150 million commission, fees. And that's basically what happens. And then the CEO goes, I'm doing stuff. I'm doing M&A. I'm powerful. I feel good. And it's much easier doing that than actually improving your business, which is tedious and difficult. And, what's the current CEO doing? The tedious and the difficult. He's not buying stuff. He's actually getting rid of stuff. So you're going to love the man for that. So 400 million monthly users, 30 million merchants. That's an empire waiting to be exploited. Yes, he's going to exploit your data and it's going to be brilliant. It's the holy grail of advertising, and give it a little bit of time. Let's see how they pull this off. It's easier than ever, by the way, to execute an advertising platform because of AI, right? And you can now actually do something with the data. So I absolutely love it. So what do we do with the chart? Do we buy it here? Do we not? Well, the real breakout point was here, 30th of July. There was a second opportunity here, and there always is. There's always a rally up, and then there's always a little bit of a dip after every breakout ever. And that was the second opportunity, and I think that's when we got in on this, because we slept through the first one, which is what happens occasionally. And we are on the path. We're on that rally. We're bouncing off. On the end of last week, when we had the Fed scare, we touched the 50-day moving average line, but it held. We bounced back up, which is good to see. So I think the strength is there. I think this stock's going to go back to $200. That's my humble opinion. Of course, no crystal ball there and so on. And we will sell it if it drops. Always. We don't get married to stocks. We just pick the ones that we think make us money, and then we make money, and then we go and find the next one we think that makes us money. So we're sort of polygamous when it comes to our portfolio. And if you got some value out of this, what are you going to do? Well, you're going to go away and you're going to play with tradevision.io because it's amazing. You're going to import your portfolio into there, and you're going to actually see, where you're making money, how you're making money. You're going to see little arrows when you entered and exited trades and so on. And then hopefully you've already watched the masterclass, and then you will maybe share the video because you got tremendous value out of this. And if you haven't already and you're watching this over the Christmas holiday, I wish you a very, very happy Christmas and a beautiful, amazing start to 2025. I hope I can inspire you to up-level your skills so that this 2025 year will be the best for you and your family. I wish you all the best.
NVIDIA's chips are the hot commodity for Meta, Google, and Amazon, sending its stock through the roof and besting Apple as the most valuable company in the world.
NVIDIA is seen as the dominant force in AI right now, and AMD is widely considered the next best option. Is that good enough for you? Do you like being seen as the underdog?
I wouldn't call it a like or dislike.
What you just heard was AMD